the Fed pivot has really started to accelerate now. We're talking about more likely than not that we'll see 100 basis points of hike over the next two meetings. That's a lot. Is that changing your thesis?
Yeah, it's looking like that more so. Obviously, equity markets have looked a bit unsettled of late, as you mentioned. The US Fed is looking to front load a lot of their rate increases sooner rather than later, with the potential for a 50 basis point increase in May looking more likely than not. And added to this, as we've seen following the war in Ukraine, with energy prices and oil rising strongly, and as we've seen this sort of higher and stickier inflation, they're sort of really key concerns at the moment. I mean, the Fed's is walking a bit of a tightrope. If they undershoot on interest rates, then they obviously will, look to be fueling inflation. If they overshoot, they could potentially bring the whole global economy into recession. So, in terms of our outlook, it's pretty much remained the same. We are closely monitoring the key variables and their impact on equity markets, namely global growth, which it was looking pretty strong. It still is looking solid. For 2022 calendar year, 2 to 3% global growth, above trend. Now it might be sort of looking more closer to long-term trend. Earnings expectations for Q1 2022 of 5 to 6% in the US. Again, not as good as what they've been, but still a pretty good number. There is some uncertainty with that, of course, if as the Fed is looking to front load those interest rate increases. And valuations, although markets have come back quite a bit, they're still sort of tracking relatively just slightly above long-term averages. So they're not looking cheap, but at the same time, they might look that they might get a little bit cheaper. On the other hand, obviously, corporate balance sheets looking pretty strong, even with obviously rate rises. Obviously, and the low sort of bankruptcy rates, historically low bankruptcy rates, means that it's not a bad position.